Carl, thank you very much. Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour. The state of stocks, the Dow at 50K, the equal weight S&P at record highs. All those questions swirling about the AI trade. We debated all with the investment committee, as always. Joining me for the hour, Joe Terranova, Jim Lebenthal, Steve Weiss, Bryn Talkington. Let's check the markets. We are green across the board, so we're trying to build on that big comeback on Friday. Joe, I laid it out. Dow's higher than 50K, S&P equal weight record high, and Ed Yardeni says you ain't seen nothing yet. He says Dow 70K by 2029. Dow theory remains bullish. The delivery side of the economy, the transports, he says that's confirming that the production side of the economy, the industrials, that the market is still in growth story mode.
Well, we tried to speak to that throughout last week as you had that significant deleveraging event going on. And it was really about cascading liquidation in a very systematic-oriented type of way. We tried to identify, Scott, the fundamentals are fine. If you look at revenue growth, look at earnings growth for the 60% of the S&P 500 that have reported so far, it is incredibly robust, the way it was in the prior 4 quarters. So we've had the narrative in which you broadened out the opportunity set for sure. S&P equal weight, that was the tell last week. And now this week, we're beginning the week with some strength once again in the Mag 7 names. NVIDIA's working well, Microsoft working well, and then we'll talk a little bit more, but software is bouncing as well today. So I think all of that collectively is a pretty good setup as you move into what will be 2 critical economic numbers later in the week in labor and inflation.
Bryn, what a week we're coming off of, huh? I mean, you have the big upset midweek, and then, Friday, that massive comeback in so many areas of the market, and now we turn the page to this new week and try and think about where we are and where we might be going. And it's your RSP that's done so well, which you keep telling us why you have been in that. So what do I do from here?
You let it run, first of all. And so I think for those who don't own it, and it's important even if you do own RSP, it's somewhat equal weight by security, but it's not by sector. So industrials are over 16%, by far the largest weighting in RSP. And so is that broadening out? Obviously, industrials also hit the AI narrative as well. I think you're just seeing sentiment and flows are going to continue to move out as we're all asking questions. Over the last 10 years, these amazing companies, the Googles, the Metas, the Amazons, et cetera, which have been cap light, high margin, really solid recurring revenue, are now becoming CapEx very heavy, more debt, and lower margins. And so I think this market is in this digestion phase of saying, how do we value, I'm putting them all together for this comment, how do we value these going forward? While we do see this economic expansion, which really is just right in the center of what RSP gives you. I will say one thing, though. You can't get away from AI. I looked at the top holding. SanDisk actually is the #1 holding at 50 basis points, which is twice the average holding weighting of any of our stock in there. So we still have AI anywhere we go.
Now, Weiss, it doesn't matter whether you think Yardeni's going to be right about 70K, but what he says about the mechanism to get the market higher from where it is now feels like it's right on the money. That the delivery side, as we said, the transports and Dow theory traditionally confirms where the economy looks to be, and the production side, industrials say that he says the market currently views the 2026 growth story as fundamentally solid. Hard to poke a lot of nails in that.
Yeah, I'd agree with that.
Poke a lot of holes in that, excuse me.
Yeah, and I don't really care about his targets, you point out. It's what's the direction? We can worry about targets later. So I think everything's in place for the direction. But here's what I find that's always so interesting in periods like this, which is that when markets correct significantly like we had, everybody says, oh, that's healthy. But when a market shoots up like it did on Friday and it shoots up again today, Nobody's saying, well, that's unhealthy. So to me, what I'm getting at is that valuations right now are too high. So it would have been good to see the market base for a little bit.
When you say valuations are too high,
yeah.
Don't you need to be more specific when you say
Sure.
that rather than a blanket?
Exactly. So what I'm talking about is Microsoft's adjusted, right? But now there's a legitimate conversation here is where their growth slowed dramatically. I think that Meta is a great valuation. When I look at some others and where the momentum is, and I own it, like Vernova, GEV, I don't know how you justify that. And you've got some others. I can justify Taiwan Semi, even though it's far above what the valuations, what the multiples have been. So my question is, and I don't know the answer, do we have a new valuation paradigm that's going to continue to support these? And that's driven by AI, even Caterpillar, which I own, and Jimmy, I think, would agree that that's overvalued here, right? But anything that's still associated with AI is getting those premium valuations.
Well, it just depends. Not everything is anymore. I mean, you mentioned your Microsoft,
right,
which is really in the eye here.
Yep.
So it got downgraded today to hold from buy.
Yep.
The target to 430 from 625.
Yep.
From 625 to 430 at Melius, which says, quote, Satya lost the AI narrative. That's a pretty harsh description of what this particular analyst thinks is happening at Microsoft.
Right, and if you compare that to what was being said about Alphabet about a year ago, saying they're out of it, search is dead, we're going to lose them all to search, everybody's going to cannibalize it, and it's not, I don't think it's exactly analogous, but
you're right.
But the damage to Amazon and the damage to Microsoft, those are going to be years in the future. I'm not even sure there's going to be damage to Amazon. And apologies, Kevin, but I added to the position this morning.
Okay. Kevin's our executive producer, whom you didn't tell about the move, which is why you're apologizing now.
I apologize to him. Yep.
Do you think all the viewers know Kevin? Now
I think they should.
Now they do, obviously.
I think they should know Kevin.
We need
right,
context.
Kevin?
We need context around most of the things that you say, but this particular one is helpful.
That's true. I'm typically far ahead. But here's what I'd say. Comparing it to Google is you can justifiably do that. There are some differences, though, right?
Of course.
And I think that Microsoft, it's too early to say that Nadella's lost the AI narrative. It's early days. They've shown a willingness to spend. They've got the relationships.
Well, okay, I'm glad you bring that up. And I'll turn to Jimmy on that one, too, because you own Microsoft as well. Weiss says, yes, they've shown a willingness to spend. This analyst says they're going to need to keep spending even more, and more, because they need to keep pace with Google and Amazon. And they think that as a result of that, free cash flow is going to take a hit. That's sort of where the story begins and ends with the concerns about AI spending. How can they possibly be spending all this money? All that means is that you're spending such a significant percentage and pledging to spend such a significant part of your free cash flow that makes one nervous. Now, as part of the conversation that we had with Jensen Huang out in California on Friday, and Brad Gerstner as well, Jensen, and so did Brad, made the point that if you're looking at free cash flow, you're missing the story. If you continue to spend, you're going to drive your free cash flow higher. You might be draining it in the near term. You're going to drive it higher over the long term, which is why when I asked Jensen directly about all this spending and the agita in the market about all the spending, when you're talking about $600+ billion this year alone, about all that spending, is it justified? Here's what Jensen said.
Appropriate and sustainable. And the reason for that is because all of these companies' cash flows are going to start rising. People are comparing it to cash flows. One of those numbers are wrong. It's just the cash flow is wrong. Every single company sees the same inflection point, and that's why everybody's leaning in so hard.
What do you think?
Could he have been any clearer, honestly? And great interview. I was on a plane back from Europe last night. I was catching up on the episodes, and I watched it. And frankly, based on his response, appropriate and sustainable. Jumping ahead here a little bit, Scott, but I did buy some more Oracle this morning. I mean, look, he's in the position, and whether it's Microsoft, maybe it is too early, Steve, but it's the same sort of thing. What he and Brad both said is that all of these models are the ones that you should invest in. It shouldn't be, hey, I think Gemini is going to be the winner, or Anthropic Anthropic's going to be the winner. I think what Brad said was they're going to be everywhere all the time. Wasn't that his exact words?
Yeah, but I mean, you're taking it to a different place here by listening to what Jensen said and trying to extrapolate that and say, well, that's why I bought more Oracle as the stock's been in a real bad period.
But why has it been in a bad period? It's been in a bad period because of this perception that AI is a bubble and that it's not profitable, and all of these cash flows that are being invested are not going to have a return. Do bear in mind what Jensen said, that all of these tokens are profitable right now, that every incremental investment is something that there is a return on. And it was based on those statements that I said, and again, Oracle is in the crosshairs of people saying that this is a bubble.
It was down 11% last week. Was Oracle. The target today got cut at Bernstein to 313 from 339. So it's still well above where it is now,
and
obviously.
Don't blink. Don't blink, right? Because it's up 11% today. And I do think a lot of this has to do with the interview on Friday with Jensen and Brad, but particularly what Jensen Huang said, that these tokens are profitable right now. And he drew a distinction to the late 1990s. Remember this with dark fiber, and saying they knew at the time that wasn't generating revenue.
Well, that's what I asked him about the PTSD that a lot of investors have, which is why there's so much trepidation around the whole story, about all the spending, about some of the circular deals, about what's taking place in software. It's like, we've seen this movie before. We know how it ended last time. Things could be, quote unquote, different this time, but maybe some of the scenes look the same.
Dark fiber didn't turn out well, by the way.
Dark fiber didn't turn out well.
You wrapped it around the earth like five times more than you needed it.
If you go back to Oracle, if you believe the numbers in 2028, it's trading at something like 14 times earnings. And I'm going to tell you, for that growth rate, it's a bargain to buy it here. But you have to believe those earnings. If you believe AI is a bubble, you're not going to believe the 28 numbers for Oracle are even remotely feasible. If, however, you listen to what Jensen Huang said on Friday and what Brad Gerstner said as well, you're going to say to yourself, yeah, I believe. And one more thing, if you look at what OpenAI is doing right now, not just with the monetizable contracts that it's bringing in, but with the funds that it's raising, that $1.2 trillion becomes more realistic when you see that they're raising somewhere between $50 to $100 billion right now.
But you not only bought more Oracle. I mean, you must have been just cruising down those slopes in France. Winds just blowing through your hair. You're feeling great about yourself. You're having your fondue and après-ski, and you're like, I'm not only going to buy more Oracle, I'm just going to lay it all on the line, and I'm going to buy more Adobe, too.
Well, you know, look, I'm going to be very honest here. I watch the show when I'm not on. And I thought the conversations last week were tremendous in this software apocalypse, which wasn't... Listen, I'm complimenting you guys. Take the compliment. In this software apocalypse, which was not just last week. And I listened to everybody, and I totally agreed with all of us who were saying this is overblown. And if I look at Adobe, I know I've said this many times this year, but I'm going to say it again. How many PDFs, you, the average viewer, how many PDFs have you opened just this morning? Adobe is not getting replaced anytime soon by Anthropic or anything else.
See, I disagree with that.
Well, yeah, but this is what makes a market, and you can disagree with it. That's fine. You understand my stance that at 13 times earnings, Adobe is not getting replaced. No CTO is going to their CEO today and saying, let's replace PDFs.
Let's go there, because if you talk about 13 times, there are those who would say that's completely justified, and arguably the multiple needs to go even lower. As you talk about the apocalypse in software, which is down 22% year to date. We know it's been in a tailspin. I asked Brad Gerstner why investors have been selling those stocks. I want to listen to that because it plays, Jimmy, right into exactly what you're saying. Here's Brad.
I'm not penalizing them because they're missing their numbers today. I'm just putting it in the too hard bucket because I can't predict those future numbers. So the only way that reverses, Scott, is those companies have to accelerate their core revenues and show that they are beneficiaries of AI. The companies that do that, Databricks is accelerating their core revenues. I think this quarter they grew over 60%. Snowflake, ClickHouse, these are companies that are accelerating their core revenues because AI relies on them. I think they'll do fine, but application software where I can't see into the future, they're going to have lower multiples.
He didn't say your stock by name, but isn't that what he's referring to? Like, are they accelerating their revenues on this? Are they proving that they're a beneficiary of AI, or are there very big questions about where they're going to be in the future. There's a tremendous opacity around that, and that's why they have the lower multiples and arguably will have even lower from here.
Boy, I mean, if you're saying it's going lower than 13,
I'm not saying anything. I'm just telling you what he's talking about.
All right, if one in general is saying you're going to get Adobe less than 13, go ahead, maybe. I don't think so. To answer your question directly, this is a stock that's been growing the top line around 10% a year and growing the bottom line, the earnings per share, in the mid-teens. And I see that continuing. Those are the projections, by the way. Brad's right. He's absolutely right, and I thought he put it extremely well. If it gets harder to predict what these earnings per share are going to be versus 3, 4, 5 years ago, then the multiple should come down.
But
Guess what? 3 years ago,
isn't it already harder? His point is that we're already here.
It's already in the stock. The stock's multiple has gone from 30 to 13 in 3 years.
What if 13's still too high?
That's the market. Steve thinks it's too expensive. I think it's too cheap.
I just think
30 to 13, man. I
have a bucket like that. That's too hard. Let me move on to something else. But here's why Adobe can be replaced.
And then I want to get Bryn into
right.
Okay?
Microsoft is an operating system that's much harder to replace. But Adobe is not. Adobe is a security software to protect your documents. Now, instead of paying a license fee for everybody sitting in your company, you can design that same security by using Claude or whatever. You're going to do it. And that's why you can't buy the stock
You're absolutely not.
Why wouldn't you?
Because you're not going to take the reputational risk that all of a sudden your document looks like it's written in Sanskrit when you send it to an important client. You're not going to take that risk.
I use DocuSign all the time.
There are many who think that all that's happened in software has been way overdone. Ives with a note out today says Salesforce and ServiceNow way overdone. The Wolf today on the contagion around software. Software, they suggest, quote, is as oversold as it's been over the last 20 years. Others are talking about the same sort of thing. Jensen Huang had a bit of a different take. Now, I don't necessarily think he's talking about the same types of software companies that have been caught in the downdraft, but I asked him also, what is going on here? Here's what he said about the opportunity.
We are addressing the largest software opportunity in history. For the very first time, software is not just a tool. A tool is like Excel. Now software uses tools. So these AIs use Excel. And so I think the opportunity for this new era of software is incredible.
Bryn, I'll have you react to that.
Yeah, I mean, I think that we are at this inflection point. I agree with Steve, there are some things that are too hard, but I think that when you do look at the ServiceNows, the CRMs, the Salesforce, I mean, Databricks is private. There is a tremendous amount of opportunity, but I do not think it's going to be V-shaped because I do still think people are going to continue to question, is this in the too hard bucket? I wouldn't be buying IGV. I think it has I don't like the lumpiness of how it makes up. I think it comes down to also, if you look at Microsoft and Oracle have tied themselves to OpenAI. And so if you look at both of their remaining performance operations, way too much is reliant on OpenAI. And so Sam Altman, I think, is masterful at fundraising. But I think the market is saying we are going to vote against both of you companies because we think there may be a better alternative than OpenAI, and you both have hitched your wagons to them. And so to me, that's going to continue to be with those software companies, why they're going to be penalized. But I do think, especially like a ServiceNow, when you had Bill McDermott, actually, I think he bought 20 million shares a week ago. That is going to be one of those companies that you just have to have, and they have a strong moat.
For the entire software industry, I agree with Bryn. I don't think we are at an all-clear moment. I don't think it's going to be V-shaped. The technology is going to continue to advance. Just look at what we heard last week from Anthropic and the disruption it caused to the financial data service providers. As it specifically relates, and I think what you have to do here is be very idiosyncratic. Jimmy, you talked a lot about Oracle. You made one mistake. You didn't mention last week's debt offering. And if you talk to fixed income managers, that is where there was comfort that you could actually go in and buy Oracle. The CDS tightened on Oracle the most since April of 2021. The demand for the $20 billion high investment grade offering, not high yield, which a lot of people, myself included, have worried, are they going to fall to high yield? Investment grade, $25 billion, $129 billion in demand. That's a record. So right now, what you're seeing from a lot of the hyperscalers, we heard this morning, Alphabet, they are going to offer $15 billion in debt. Meta did $30 billion. Very strong demand. The hyperscalers are getting strong demand for that investment-grade paper from fixed income managers, and that's where you get the comfort on Oracle. But universally, I don't think you could have it. I'm with Bryn.
How about what the upset in software has the tentacles kind of spread everywhere. Private credit, we talked a lot about those names, which were under some pretty heavy selling pressure last midweek for a couple days there, where they were down significantly because they've lended a fair amount of money to these software companies. Which brings me back to you, Bryn, because you bought more of the Blue Owl Technology Finance OTF. Tell me more.
Yeah, I mean, to me, where I think IGV is somewhat in the too hard bucket, buying OTF, especially after earnings last week, if you listen to Mark Lipschultz, this stock is overdone. These are pristine loans. Of course, they'll have write-offs. It's loans. But when the analyst asked Mark specifically about this portfolio, if there are any concerns, Mark said, not only do I not see a red light or a yellow light, we see a green light, that these are high-quality companies. These are not venture debt. These are billion-dollar revenue per year with 300 million EBITDA. There's a huge equity cushion. And so if you buy it right here, once again, the yield is based on the book value, the original book value, which is around 17. You're getting around a 13% yield on this today. So to me, this is a great way to play technology. I get a really high yield, and over the next year or so, I think we'll get really nice capital appreciation as Blue Owl's underwriting standards show themselves that they're just not willy-nilly writing these loans. And I think the market's really wrong, especially on this stock here.
Okay, Weiss, what do you think about all this?
It's. I think they're going to be fine, and I think what people are not focusing on here is that a number of the companies in that Blue Owl is lending to are going to have IPOs. And so I think that all the private equity firms are poised to outperform because we're seeing just massive pipelines, and they're going to come to market. Now, you're not going to have a great market that's going to go to Ed Yardeni's target without IPOs getting the all clear and secondaries to help take some of the debt off the balance sheet of these companies.
Probably have some of that.
Yeah, so I think we're fine. They underwrite responsibly. There will be write-offs, as Bryn mentions, but Blue Owl. I mean, I've met some of these guys, found the company. I mean, they're not taking chances. They've got significant wealth in there, so I'm not really concerned about it.
You guys want to talk about Bitcoin and what's been happening with that? Let's take a look. Well, we could stay there for a minute because the stock is moving, and maybe it's in part on Bryn's move. Maybe it's in part on Weiss, the narrative that you have around some of these. You got a last thought here as we look at.
I mean, it's the signature of what I mentioned at the top of the show. It's deleveraging. It's the reduction of utilizing debt within the market. I think there were a lot of margin calls, and we saw a cascading effect of all of that. And ultimately, it led to a print of 60,000 in Bitcoin. Steve knows better than I, Bryn knows better than I, where it goes from here. But generally, what tends to happen, as you and I discussed last week about the silver market, is when you have that type of deleveraging, people leave the market for a temporary or an extended period of time.
You're talking about this, what we're looking at on the screen.
You mentioned Bitcoin. You said, do you want to talk about Bitcoin? You did.
I'm with you, Scott.
Okay, let's talk about Bitcoin, because I started talking about Bitcoin, but then mentioned Blue Owl in the move, and that's we went back.
I heard you say, let's talk about Bitcoin.
Well, I know what you heard me, thought you heard me say. Can we look at Bitcoin now, please? Bitcoin now.
Okay, here we go.
Bitcoin 69, so we're under 70. Bryn, you bought more of the IBIT.
Yeah, I think that what's going to come out, I've talked about the yen, the leverage in crypto, what you saw, to Joe's point, the leverage in gold and silver. What was happening in crypto felt like a massive washout and this ripple effect. So I just think it was overdone. So I took the opportunity on Friday to add to the position. So I'm a long-term holder, buy low, sell high. I don't buy into, if you go on like X or something, the bear narrative is out of control. I just think this was a good old-fashioned massive margin call that I think we'll find out, let's say, when all the 13Fs come out, what actually happened here. But to me, it does feel like this is something really over-levered, got overdone, and so added to the position. Nothing more than that.
Okay. I mean, Bernstein today says nothing's broken in Bitcoin, that the current price action is a mere crisis of confidence. Nothing broke, no skeletons will show up. The Bitcoin bear case is the weakest in its history. The Bitcoin bear case is the weakest in its history, according to Bernstein. You agree with that? I feel like it's the exact opposite of that. People think now it's the exact opposite of that. Like the bear case around it feels like it has more legs.
Yeah.
It feels like it's maybe more than just a crisis of confidence.
Yeah.
But you guys, you tell me.
Yeah, look, I'm
only channeling what I
yeah.
hear and suspect, and not necessarily what I know.
Okay, if Adobe's in the too hard bucket, my too hard bucket, and Brad's, this is in the impossible bucket. And the reason I say that is that nobody's been able to tell me what the intrinsic value is here. Nobody's able to tell me what the business use cases are. You can make something up like blockchain technology and security, but that's BS. We've seen so many of these, Bitcoin wallets stolen. So I think what you've also seen, and I mentioned this a few weeks ago, you've seen some of the Bitcoin holders who incorrectly thought this was a store of value move into gold. So now they're in gold, and this is a massive drawdown.
Well, that's kind of my point. It's like,
yeah.
Oh, it's digital gold, it's digital gold, it's digital gold, until gold looks pretty good, and then, well, gold is gold.
Yeah, gold is gold, and gold will always be gold. There's no there. Now, it should bounce because Bryn's right. A lot of it margin calls, a lot of it, were just momentum players. Momentum's been dead for a while. They finally threw in the towel and sold it. So theoretically, you should get a bounce, but you need, you need $100,000 Dow to see this go up a lot higher.
All right, so let's take a break. All right, we're back. Dow still holding on to 50K. Let's talk about some moves that we never got to on Friday, but I know you want to hear about. Weiss, you sold Uber.
I did.
I mean, you've been trimming it down, and then you sold it.
Yeah, I sold it all. I had been trimming it down. Look, just frustration with it. I think also it remains to be seen the profitability of robo-taxis. They're partnering with Waymo. Partnering doesn't give you the same margins, so clearly the margins will take a hit. And I think, when I go back to why I bought it because of scarcity, that there was Lyft, and Lyft continues to have their issues. And then there was Uber, so they were the only game in town. No longer the only game in town. I don't think robo-taxis are going to be everywhere all of a sudden, but look, it just hasn't performed. And I was waiting for a more sustained correction to put that cash to work. So I don't mind having cash.
Okay. You trim Netflix more. We don't need to get into it again because you've consistently trimmed it down.
It's just dead money.
That's what you've said.
Yeah.
Just because the deal uncertainty.
Exactly.
So you bought more Corning.
Absolutely.
GLW.
Yeah, and
Tell me why.
I've explained over the last several weeks the fundamental reason why the $6 billion relationship with Meta through 2030, the consumer premium glass market share that this company has.
The glass that Bitcoin obviously uses.
So now what we're doing is we're recognizing the strength of the technicals and the momentum. And in the most recent JOT rebalance, we saw a significant move higher in the ranking for Corning. I'm excited by that. It's sitting right on the threshold. So I'm going to continue to buy more. I looked my initial buy at 109 on February 2nd. Zoom is another name that I bought around that day. I'm going to continue to add to what is working and moving higher.
You see how good he's gotten at literally not listening to me at all and just continuing to go on.
Where are we going next?
We're going to Cleveland Cliffs.
Oh.
I know.
What do you?
But Jim bought more.
Oh, guys, no, come on.
You bought more.
Yeah, I did.
That's the only reason we're going there.
Is it all right?
No, I bought.
Do you own the entire float yet?
Hang on. I know it's all funny, but let's talk about this. First off, why is the stock down? Stock is down mainly because it was up 45% over the last 6 months coming into this. Now, maybe people wanted something more from this report. If you wanted something more from the fourth quarter reported, you're looking in the wrong direction. You got to look forward. Where what we're seeing is prices on hot rolled coil steel going up. You're seeing volumes going up. You're seeing costs going down. 2026 is going to be a good year. Now, some people may also have been wondering what's going on with the POSCO deal. Do bear in mind that there are negotiations going on between the governments of the United States and the government of South Korea about a trade deal. So POSCO is obviously going to wait for that to be done before finalizing any deal with Cleveland-Cliffs. And Cleveland-Cliffs isn't going to do any deal unless it makes sense. They don't need to, because as I just said, volume's going up. The prices that they are achieving are going up, and the costs are going down. I've bought this stock on dips before. Steve, you'll remember, first quarter last year, stock was down at 7. I bought some more. You said you wanted to stage an intervention. It was funny, but it was inaccurate because you were supposed to buy then as you're supposed to buy now, Joe.
Jimmy, may I ask a question on behalf of the viewer? Okay, you look at the stock. Stock is sitting right now at the 200-day moving average. The stock is down 17%. That's a big move in one day. Also, the price action today is not particularly encouraging because the stock is down 17% and it's literally sitting on the lows. So where are the buyers coming in to accumulate? What do I do if it breaks below the 200-day moving average?
You're speaking like a trader. I respect it immensely. There's too much fundamental going on here that, in my opinion, outweighs what you're talking about. Yes, it's down a lot on the day. As I said, it's up a lot over the last 3 months. And again, look for when the U.S.-South Korea trade deal is finalized that POSCO probably comes in and makes an offer.
But that's unfair, Jimmy. You say it's up a lot over the last 6 months.
6 months. You pull it back 5 years.
Yeah, I mean, I sold the stock in the 20s. You thought it was going to the 40s. You said it's not a commodity business. Well, that they'll always generate mounds and mounds of free cash flow, and they have it. So at what point do you say, you know what, I'm in love with this rather than I'm an investor in it?
I respect the question. I respect the question. Here's the answer: is I traditionally, with all the stocks that I think I have a fundamental thesis in, that I have an edge in, when they go down, I buy them. This was true with Citigroup, Wynn Resorts, any of a number of names like that, Boeing. But let me continue here, okay? Because your point, it's a commodity stock, except there's a difference here. 5 years ago, this stock was doing $2 billion in sales. Now it's doing $20 billion in sales. How have they done that? They've done that by taking the cash flows and investing it in acquisitions. And those acquisitions that they have now digested are going to show the free cash flow generation this year from those acquisitions. Just take that $2 billion and that $20 billion and apply the 13% EBITDA that historically has been their margin. You're going to see a pretty big cash flow uptake here.
All right, let's get. All right, we're back. The setup, you got Spotify, Joe,
falling
tomorrow.
Knife. I mean, that's all you need to say. It's a falling knife. It's broken momentum. Barely survived the most recent momentum screen for the rebalance. Who knows?
I mean, the thing about this is AI disrupted. You could put in.
Yeah.
You could go to LLM. You put in like, "Shay, give me the best playlist of these, that, whatever." Now it's not the mechanism to actually play the music, but I don't know. The stock reflects something that is reflective of what I just said.
You also had the CEO, who's the founder, leave the company, and they haven't recovered from
I got you. 6 months down 41%, 3 months down 32, 1 month down 23. Dan Greenhouse, Shonali Bassick, Dan Ives, Bill Miller, Ashley McNeil are on the closing bell at 3 o'clock. I'll see you then. Bryn, what's your final trade today?
INFL. It's a strategic way to play infrastructure, but in asset-light companies, in royalties, global exchanges. It's the toll booth of the infrastructure market.
Weiss.
Amazon, for what I said, I think it bounces.
Farmer Jim.
Transocean told you about this 2 weeks ago.
Interactive Brokers ready to make a new all-time high.
All right, well, it's on the way there. All right, I'll see you at 3 o'clock on the closing bell. The exchange.
Hello, everybody. Welcome to Blue Cloud Trading. I'm George. It's Monday. It's February 9th. And let's take a look at the markets. You can see here, it's actually 2:35 p.m., just so you know. The market has not closed yet, but the Dow is actually up 0.11%, NASDAQ up 1.15%, S&P 500 0.66, and the Russell 2000 is up 0.89%. What's interesting is this morning, the price, the majority of the stocks were down, okay? And especially in the Russell 2000 here, and then they started to recover. So I would say, what time was that? Probably around 10:30 or so, 10:15. Prices started to move up. Now, we just saw some clips from the halftime report, and in this video, what I'm going to be doing is going over a number of those stocks. So we'll start off with the S&P 500, the Dow, the Russell. We'll look at the technicals on those ETFs, okay? And then we'll also take a look at the Mag 7s, right? Apple, Google, Meta, Microsoft, Netflix, NVIDIA, Tesla. We will look at Let's see, what else will we look at? We will look at about 21 stocks. There's a lot of stocks here. I've already reviewed them all, and the ones that are strongest will be at the top, and the weakest ones in the bottom. We'll also look at some members' requests here. So we'll take a look at these four stocks. So let's get started. So the first thing we want to take a look at is the S&P 500 heat map. All right, how are the stocks doing? The individual stocks within the S&P 500 today. Microsoft is up 3.4%. Nvidia is up 3.19. Broadcom up 4.6. AMD is up 4.34. Meta is up 3.06, and Tesla's up 2.32%. Those are the strongest, large stocks within the S&P 500. We've got some smaller, companies like computer, hardware, and like Anet and WDC are up. In the electronics, you got APH, okay, GLW, TEL. The consumer defensive sector not looking particularly great today. Basic materials is mixed. Energy mostly positive. Utilities mixed. All right. Industrial is also mixed. Healthcare not so great today. It's kind of a down day. Let's look at actually, take a look at those groups real quick, and you can see that basic materials is actually the leader today. It's up 2.62%, followed by technology, communication services, energy, industrials, utilities. Then you've got consumer defensives and healthcare at the bottom today. If you look at the 1 week performance, though, energy, basic materials, industrials at the top, communication services, consumer cyclical, and healthcare at the bottom. Technology only up 0.48%, 1 week performance. Let's go back for a moment. I just want to check one more thing from the heat map here. We want to look at the themes, something I like to look at to see what specific themes are looking good today. There we go. Let's zoom in a little bit on that. There we go. So we've got like artificial intelligence. Look at the stocks here, looking pretty strong. Semiconductors, right? Software stocks looking good. Hardware. Zoom out just a little bit. Whoops. There we go. What's not looking particularly great? I mean, just I don't know, under consumer foods, you can see some of the stocks there. Farm Direct, DTC, everything else is looking very bullish. Insurance companies not looking particularly great. Supplements, okay, healthy aging. All right, now let's get into the stocks. Okay, so we're going to start off, like I said, with the index ETFs, and we're going to look at the S&P 500 first. And here it is, once again, struggling. Here's a weekly level. Do you see this little candle right here? That was a prior high in the past. I think we're going to move our level because price had dropped a little bit here, and then we did create a higher high right there on that candle, the high of 697.84. So I think I'm going to fix that right now, 697.84. That's the new level that needs to be broken. Um, in my opinion, that's more relevant now at this point because we're looking at weekly candlesticks here. These are weeks, 3 weeks in a row where we're still under the 697.84 level. Okay. Um, so yeah, we need a breakout soon. Here's a daily chart. You can see the consolidation that's taking place with the S&P 500. But like I said, we did have we're having an update, 0.72%. As you can see here, the down below, and I'm going to just show you guys the time is still moving, 2:40 p.m. There's a seconds going on. The Dow Jones, so we're kind of doing like a live analysis right now. The Dow Jones on the daily chart looking very strong. We broke through. We broke through on the daily chart through this consolidation. It happened with higher volume. You can see that candle right there. Reflects that candle right there when it broke through that 496.34. Right? Is that the level? I think so. Yeah. 496.34. So that's very bullish. Here is the weekly chart too. All right. Very strong uptrend, guys. Let's look at the Russell 2000. Here it is on the weekly chart. That also looks really good. Here's the daily chart. For those of you who are not familiar with this indicator that we're looking at, let me just get rid of the lines for a moment. And let's zoom out a little bit here so you can see this a little bit clearer. We're using the Ichimoku indicator, and so basically it's really simple once you understand the rules of this indicator. So there's really 5 lines, 5 moving averages. You've got that green line right there. That's the 9 period. It takes the midpoint of the last 9 periods and plots it. Then you've got the Kijun, and that's called the Tenkan-sen. Okay. Then you've got the Kijun-sen. That's the 26 period. So that takes the midpoint of the last 26 periods. When I say midpoint, It takes the high, the low of the candle, divides that by 2, okay? And then it goes back 26 periods, and it does that for each candle. That's how that's plotted. That's precisely why sometimes, as you see here, the indicator and the moving average actually flattens out because it's looking at that average, right? So that's very unique about this indicator. And then we've got the cloud, the Ichimoku cloud itself, right? So how is that put together? Why, how is that plotted? Well, it takes the midpoint of these two moving averages, okay? And instead of plotting it, like, under, it's plotted out into the future, 26 periods into the future, right? And that's called the Senkospan A. And then you've got the Senkospan B, the purple line right there, the other part of the cloud, and that is essentially the midpoint again of the last 52 periods. So it's a longer time frame or a lot longer moving average, but instead of plotting it under the candle, it's plotted 26 periods into the future, and that's how it's created. So, this is looking very strong here. The Russell 2000, obviously, we're way above the 50-day moving average, 50-day moving average as well. The 200 days, right, the dotted yellow line right there. Notice how the one key thing about the 200, it was kind of moving flat here. Do you see this right here? This little flat point. And if I was to just kind of draw just like a little line right there, do you see how it's now starting to edge up ever so lightly right there? That's really important. So we're going from a 200 week, sorry, because we're looking at a weekly chart here, 200 week moving average that was flat here to actually moving up slightly, which is very nice. I like to see that. And here's the daily chart, it's more pronounced, and you can see that on the daily chart since it is a faster time frame that we're looking at here. And what I like about this Russell 2000 recently, for example, is that you can see here that we were pulling back for a bit. On Friday, we had the breakout, right? We had a nice, very bullish day on Friday. Boom, it popped through that trend line, and now it's continuing to the upside. And I'm not shocked by that. Here's the FEZ Euro stocks. Same situation as far as on the daily chart. You can see that it was pulling back. On Friday, it broke above the trend line. It also broke above that 9 period, which is very critical. And then look at it now, it's up 1.67%. And remember, I also look at the weekly charts, and that's looking perfect right there as well. Very, very bullish for the Euro Stocks 50. This is for someone that is interested in having a little bit more, instead of just US stocks, if you want to have a little more diversification, this is not a bad ETF, right? You can see some of the list of stocks that are in there, right there. Okay, but let's look at QQQ. Here's the QQQ ETF. Now, this one is not that great, and I'll tell you why. It's pulled back, and on Friday last week, it basically stalled. It stalled at the cloud itself right there. It wasn't a conclusive break above there. And then today, you can see here we gapped down a little bit. We gapped down under the cloud, and then we got back above the cloud here on the daily chart, which is a bullish situation. It is bullish, but it didn't really happen on high volume. Look at the volume down below. It's half the volume traded as it was on Friday. And so it's also stalling at those two moving averages. They're now colliding. They're at the exact same point. One of the cool things about the Ichimoku indicator is the fact that, yeah, when these averages they will start to merge sometimes, right? And they will be at the same exact level. If I hover my mouse right there and you look over here on the box on the left, I want you to look at conversion and baseline, which the conversion is another name for the Tenkan-sen, the green line, and the baseline is another name for the Kijun-sen, the red line. Okay, so notice what the conversion says: 615.68. Baseline 615.68. Now, currently, we are above that both of those moving averages. We're at 616.17. I'm not sure where the Qs are going to close by the end of the day, right? Because we still have another hour and 15 minutes or so. So, that's we have no clue quite yet, but we're really close to those levels. This is not the time to be jumping in my opinion, not quite yet. Here's the weekly chart. Last week we actually closed under the 9 period that Tengen's in there. And so this candle is still forming. We won't know what this looks like until Friday, this Friday afternoon, um, this week. Okay, so my suggestion would be to wait a little bit longer. We want to get some confirmation because the technology stocks have not really been performing that well, as you'll see in a few moments when I go over some of them. Here's the VIX, which is dropping down 4.45%. Here it is in the weekly chart and the daily chart under the cloud. That's good. We want to see that volatility dropping. That's an positive indicator, actually. We want that to be dropping, not moving up and spiking. When the VIX spikes, the market generally drops significantly. Actually, let's take a look at the VIX. I want to see the percentage drop here. It dropped 4.5%, which is not a huge drop, but it's good. Nothing negative there. All right, now we're going to go into the Mag 7 stocks. Let's look at Apple, which is down 1.78%. There's a technology company that isn't really doing so well today. And it hasn't really been that great because if you notice, we had that big decline. And yes, we did break above. Let me just show you guys this trend line on the daily chart. We did break above it. We got above the cloud. But notice how it's not really taken off here. In fact, it's dropping and it got back into the cloud today. So it looks like it's more than likely to drop and close inside the cloud, which is relatively bearish. The cloud itself, which is kind of cool, when it's when we have a negative crossover, when the single span A crosses under the single span B, in other words, the light colored line crosses under the purple, like it did right there, that's a bearish signal. You would have seen that bearish signal, okay, 26 periods ago. So if I go backwards in time, okay, let's go 26. By the way, look down here in the corner. You'll see as I'm going back, you'll notice the bars, and I'm going to go to 26 bars. There it is. So you would have seen that right about here, okay? And that could have maybe kept you out of, if you hadn't already gotten out, which you should have, probably around here, on the daily chart. You might have thought twice about staying in this stock at that point as it drops some more. But like I said, it has been recovering, but it looks like it's turning over today. So be careful with Apple. It's not something I'd be interested in. Here's a weekly chart. The weekly, we did have a nice week last week where it broke above the Tengensen and Kijunsen. But look at the moving averages. They're flat, right? That's it. The green line has been dropping and it's still flat. So Google, let's look at this on the weekly chart. So last week it was very volatile. It actually got under the 9 period, Tengensen, and then recovered quickly on Friday. Here's the daily chart. So there was the big drop, right? That happened actually on Thursday, and then it gapped up on Friday. But then it closed within the body of this candle. Now that's called a bearish harami, right? These two candles right here. That's not positive. That's a negative pattern. And let me show you guys what that looks like on this cheat sheet that I use. Okay, so we're looking at this candle pattern reference sheet here. And if we go to under bearish and you look under double candle patterns, right there it is. There's the bearish harami. Again, positive large candle, bullish candle, followed by a little small one. Harami stands for pregnant in Japanese, I believe. So there you have it, right? But that's a negative pattern. The opposite of that is the bullish harami, which is on this side over here. And that basically is when you have a large red candle, like that one right there, followed by a small bullish one. Okay. So yeah, that's what we're seeing. It's up 0.67%. We'll see what happens. The good news is, a lot of times price will stall right at the cloud. It's a level of support. And it seems to be bouncing, but it's also finding resistance still at those moving averages and staying under. So I wouldn't be too excited about this here yet. What about Meta? Meta had a big pullback here in the daily chart. Found support at the bottom of the cloud. It's above the cloud again, but let's look at the future cloud. The future cloud has turned bullish, which is good, but it's still under the 200. It's under the Tengensen. It's up 3.22%. Let's look at the weekly chart. It's just a lot of mixed. What I forgot to mention earlier is the Chiku span, guys. The white line right there. That's the fifth line. What that essentially is, it's the current price. Okay, so what you're seeing right here, projected 26 periods into the past. And the idea here is to see where that is in relation to the candle 26 periods ago. Sometimes this white line will be above, like it was over here, and sometimes it will be under, like it is here. When it's under, it's bearish. Let's look at the future cloud. The future cloud is just kind of flat right now, but at least we have single span A above single span B. The faster moving average, the green line there, is under the red line. Okay, so Tenkan-sen is under Kijun-sen, so that's also bearish. And prices inside the cloud on the weekly. So I wouldn't be touching Meta. Microsoft is under the cloud. That's a bearish scenario. You don't want to be adding positions when price is under the cloud or inside the cloud or under any moving averages, according to the rules of Ichimoku. Okay. And as you can see here, we're looking at another indicator called the directional movement index that I have down below as a secondary confirmation tool. When the red line, which is the negative DI9, is above the green line, that's bearish, especially when this white line that you see here starts moving up like it is right there. Okay. What is the white line? That's called the ADX. I've got it at a setting of 9, and I've got the directional movement index set at 9 as well. It's a little faster than the traditional setting, but it gives it gives me a little bit more of a heads up about what's transpiring and maybe, thinking twice about adding a position. It also, shows you like once the momentum starts. So let me show you guys what I'm talking about. So here we have the red line crossing above the green line. If I go straight up, look at the price action. Happened on that candle right there. The moment the red line got above, everything started to fall apart. Okay, we had a drop. So again, I'm going back up to that candle. We're talking about a 17.9% drop. And when the ADX is moving down, that's generally just saying there's no clear direction, there's no momentum there, and you can see that right there as price was consolidating. But notice what happened once the ADX starts to move up. If you go straight up, it happened around that point. Boom, it starts to drop, and it starts dropping more at a faster speed. Okay, and so you have to be extra cautious. Now, with all of that said, the candlestick that's forming today is actually quite bullish, this pattern that I'm seeing here. Remember what I said earlier about a bullish harami? That's what we have here. The large red candle followed by the small bullish one. Does that mean that we should be buying here? In my opinion, no, because we're still under the cloud. Okay. And everything is looking pretty negative here. The green line is under the red, the Chico span is under price. Okay, so the weekly chart is very bearish still for Microsoft. Are there some positives? Yeah, like I said, this pattern here is positive. We're still above the 200-day moving average. Okay, last time we came close to it, it rebounded and took off again. The cloud itself is still technically positive, but you can see the Senko span A wants to cross under, possibly under that Senko span B. And here's the daily chart, which is more pronounced, right? Everything is more pronounced on the daily chart because like, again, it's faster. And on the 200-day, it was trying to hold support for multiple days here. At this point here, and then it broke under. Boom. And then it just dropped. So it's not looking good. Notice also what happened here. It tried to recover, came close to the 200 and the cloud, and then gapped down back under those moving averages. So we've got some evidence here that this indicator helps us. Now, if you go back in time, let's look at a positive time for Microsoft. And how was the Ichimoku helpful in that scenario? Well, let's go back over here. So you can see, for example, price had been declining as long as it was under the cloud. The second it gapped above the cloud here on May 1st of 2025, look at that big run. Okay, up to that point, 30.5% in just 3 months. Okay, so it opened at that price on the daily chart on July 31st, and then it dropped. That is never a good sign. When you see price gapping up like it did here, and then immediately the sellers come in and start shorting it and pushing it price down and taking profits. Okay, that can lead to a pullback. And that's exactly what happened. Price got into the moving averages here, started to decline. If we go further out over here, it tried to recover. You can see that. We had a little bit of a October 6th, 2025. It was very short lived. It didn't really get above the high of that candle there. It dropped. And then we got another situation here, but when it popped above the cloud, it actually developed a reversal candle, a spinning top, and then again another red candle, and then another red candle, and then it dropped again. So yeah, this in the red spinning top, we can see that also here under bearish single candle patterns. There it is. It looks like a spinning top. You get the small little body with a wick on the top that's equal to the wick on the bottom. So there you have it. There's that. There it is. All right, let's get through these now. Netflix. Let's move into the future. Ooh, man, look at Netflix. Yikes. That's the daily chart. It got into the cloud and it's dropped 29.3%. It got into the cloud here on October 22nd, 2025. All right. NVIDIA. Let's look at NVIDIA, which was up 3.18% today. But it's been kind of stagnant. I mean, there hasn't really been a whole lot going on with NVIDIA for a while. Look at this consolidation. We're talking about multiple days. Let's switch it to a weekly chart, actually. It's even more easy to see here. These now represent 1 week instead of 1 day. And you can see there really hasn't been much happening with NVIDIA. In fact, I'd go so far to say we might be creating a symmetrical triangle pattern here. Do you see that? Right? From that level to that level. Actually, it might even be a little bit more like a descending triangle, which is actually quite negative. It's even more negative, to be honest with you. A descending triangle. Let me show you guys the descending triangle pattern. All right. We have another cheat sheet just for that. By the way, if you like this one, you can get this for free on my Twitter page, x.com. I'll show you guys exactly how to get that. But let's look at that descending triangle first. Right. So here it is. Here's the cheat sheet. It's right under that other cheat sheet, descending triangle. Again, it looks exactly like that. You get a basically what you have here. Whoops. Let me fix that. What you have here, see this high? You have a lower high. Okay, so there's that declining trend line. And then you've got this flat support level that's broken. And if it is broken, that's when it gets negative. Okay. So that's the descending triangle, very bearish. The alternative, the bullish, the inverse of that is the bullish ascending triangle, which is a flat top, and then we have higher lows, and it breaks through. You guys may have heard of head and shoulders patterns, inverse head and shoulders patterns, cup and handle. All those are here. Okay, rectangle patterns. We have consolidation and price finally breaks through. Double tops, double bottoms, triple tops. Pennant patterns, flag patterns, all that stuff. Study these, learn these, and your trading should get much better. Now, you'll find that free as well, like I said on my Twitter page. And so, what you want to do is go to x.com, look for me under at Blue Cloud Trader. All right. But the channel is Blue Cloud Trading. All right. So, once you're there, scroll down and select highlights, and scroll down a little bit, and you'll find it here. And by the way, you'll also find the most recent members only video up here that I just posted this weekend. It's over an hour and 10-minute long video where I go over my entire portfolio, but you do have to become a member to watch it. Okay. And there is a fee for that. So check it out. All right, guys. Now let's get back. Let's get back to what we're talking about. NVIDIA. There it is. Let's go to the daily chart. Yeah, the daily is not looking particularly nice here. Let me get rid of that. Stuck inside the cloud here, but it is up 2.87%. So yeah, it's just a sit on your hands scenario. Tesla, here it is on the daily chart, under the cloud. I'd skip that. Here's the weekly chart, under the moving average here, the Tengensen. Okay. All right. Now let's get into those other stocks they talked about on the show. 21. And we won't spend too much time. Now that I feel like even if you're new to the channel, you're going to have a better sense about how we can quickly assess the strength, right? And so the ones over here with a blue flag, I've already reviewed them both on the weekly chart and the daily chart. So we don't have to go and show you both frames on all of these. So I'll just show you an example. Here's the weekly chart for Caterpillar. Prices above the moving averages. They're all in the correct order, right? And the cloud is also very bullish. Is it extended? Yeah, of course it is. It's been moving for a while, right? Since it broke the cloud right here. It's up 90.02%, folks. That's from July 2025, all right? Or June, or late June. Yeah, June 27th, 2025. So Caterpillar looks great. And can it continue moving to the upside? Absolutely. Let's look at the daily chart. Here it is. All right. So I still like Caterpillar. Looks great on the charts. Now let's keep going. GEV also looks great on the daily. It looks good on the weekly too. It's up 4.09%. GLW looks great. Corning Inc. It appears to be a little bit extended up here. I mean, it's far away. It's approximately 15.9% away from the equilibrium zone. The equilibrium zone is the in between the Tenkan and the Kijun. So if you get a reversal candle somewhere around the next, maybe tomorrow or whatever, you may want to take your profits if you happen to be in this. But that's your call. Okay. On the weekly chart, what does it look like on the weekly? It's still moving up, right? So there's nothing negative happening here. Interactive Brokers reached the 78.80 level, and it's been stalling here for 4 weeks in a row. Okay, that's a weekly chart that you're looking at. Here's a daily chart, but it looks bullish because price is above the moving averages, and it's more than likely to break through. Notice how the green line here is above the red line as well, but we don't have the momentum up on our side yet. It might break through though soon, so keep an eye on that one. INFL, all right, I like this one too. This was one of the final calls, final trades on the show. And yeah, it's great. Inflation beneficiaries ETF. If you want to have a little bit more um, diversification instead of just buying individual stocks and you want to have diversification, okay? This is not a bad call here. Look at the stocks that are in it. Let's open that watch list and you can see some of the stocks that are in here, okay? So I like INFL. Looks good on the daily, looks good on the weekly. Certainly something I would consider. RIG, Transocean Limited, looks good on the weekly chart. It's above the 200-day for 3 weeks now. Cloud has turned bullish. That's a good sign. It was in a very, extended decline here, and it dropped approximately 76% in 1.6 years. And now, since this point, it's up 181. So it's moving. That's the weekly. There's the daily. But, the energy sector, oil and gas drilling has been extremely strong recently. RSP, the Invesco S&P 500 equal weight, looks very good on the daily chart. You can see how it's breaking through that level. On the weekly, also looking very strong. In fact, I like RSP more than I like the SPY. As I mentioned earlier, we look at the SPY, it's been consolidating. Okay, so that's because it's comprised of more large cap stocks. So RSP, you're getting an equal weight on all 500 companies, including the smaller and mid-sized companies, and so it's actually a lot, in my opinion, a better place to be versus the SPY. Okay, but you're still investing in the S&P 500, just pretty much instead of them being weighted more heavily on the larger companies, it's kind of equal weight. So, all right, let's keep going, guys. Let's keep going. Now, the rest of these are not great, and that's why this one does not have a blue flag, and neither do the rest of them. So, out of 21 stocks that were talked about, just 7 meet the criteria of Ichimoku, where I would consider them. All right, the rest of these there's something off, technically, something wrong, there's something negative. And so you may want to consider not holding off maybe a little bit. Okay, you got a downward channel here with Adobe. It's under the cloud. Skip it. APO, that was a weekly chart. Same thing. Apollo Asset Management. And I'd start off, by the way, with a weekly chart always. Check to see what the long-term channel chart looks like, and don't even consider it on a daily if it's bearish on the weekly. You're gonna get yourself in some hot water. Look at Cleveland Cliffs under the 200-day here, under the 200-day here, and it's dropping down 17.38%. Skip it. Now, it is in the steel industry, which has been doing pretty well actually, but this particular stock is not doing so great, and it's been stalling. So they don't all go up necessarily, You can see how it stalled at that 200 once, twice, three times, four times. That's 4 weeks. Each one of these candles represents 1 week, and then it dropped. So the fact that it gapped down and dropped and it got under the moving averages tells me. And then, by the way, that's not the only thing. Take a look over here. Do you see how the negative DI is now crossing above? The last time the negative DI was above the positive DI on this specific stock was over here. Do you see that? That was on June 27th, 2025. All right. So let's keep that in mind. CRM, Salesforce, no on that one. It's up 1.48% today, but look at that ADX going up. The momentum is increasing to the downside. No. Gold, GLD. Okay, some good news. On the weekly chart, GLD looks good. Okay, looks good in the weekly. Let's take a look at the daily. It is today trying to get back above that Tenkan, and are we above it? Let's find out. The Tenkan is at 466.12, and we are barely above it, 466.48. The volume is lackluster. Do you see that? There's not a whole lot of volume here. In fact, it's in gold, it's been declining, which means that there's less participation in gold recently. And you can see that here in this pattern here. But it's also building an ascending triangle. So this could explode possibly. Remember, we talked about that ascending positive bullish pattern if we can get above the high there. So I think that's something to watch out. The other thing I like about gold is the fact that the positive DI is moving up, the negative DI is moving down, but that ADX is not confirming it yet. But it is starting to maybe move sideways a little bit. So we'll see what happens with gold. GLD, that GLD ETF. There certainly are stocks, individual stocks that are performing much better than the actual ETF, right? And so those are the types of stocks that I um, recommend to members when legend level members who become. Let's see. Let me just show you guys what I'm talking about here real quick. If you become a member by clicking the join button here, right? There are three different tiers. You can become a Blue Cloud supporter, Blue Cloud trader, or Blue Cloud legend level member. You have to select the right one depending on what you want. Blue Cloud supporter, you can request a stock or ETF be analyzed in an upcoming video, and you get early access to select daily videos. Blue Cloud trader, okay, this is where you start getting access to those exclusive member only strategy videos that I do every weekend, where I go over my entire portfolio and I share new stock ideas. 27 this last time. You can see here, or 28, sorry, 28 new stock ideas. I just posted that a few days ago. So consider becoming a member so you can access that video. All right. You'll also be able to get access to the other ones as well. So you can see how my portfolio has been performing week after week after week. If you want to get more up to date information about my trades, then you want to, again, click the join button, select Blue Cloud Legend. All right. Under this level, you'll also get access to some day trading videos that I've recorded. But this is the key thing, the daily stock and ETF trades updates. Okay. The stocks that I add and close out of each day and I already posted one earlier today before the market has closed. So, all right. Okay. Now, what else? So that's how you can support the channel by joining. If you want to just support the channel and you don't want to become a member, you can hit the subscribe button. It's free to subscribe. Hit the notification bell so you get notified whenever a new video pops up. All right. Okay. Let's get back to the charts. Let's see. IBIT, that's the Bitcoin ETF. It's been moving up a little bit, but it's up 1.51% today. But look at this. It's been declining for so long. Let me get rid of those lines for a moment. Do you see how the cloud just keeps you at a minimum? One of the positive things about using this indicator is it will keep you out of these bad, considering getting into a stock before it's time to, right? There is such a thing as market timing. People say, oh, there's no such thing as market timing. Okay. All right. Whatever. Market timing exists. And you want to use tools that can help you identify the proper time to get in. And this is a perfect tool, in my opinion. That's why I use it. And that's why I've been using it for multiple years. Because even though it's really old, It's been around since the late 1960s when it was published. Okay, and a lot of financial institutions use this indicator. Um, I think this is my favorite of all the indicators for sure. This is probably my second favorite. I love the directional movement index too, which is why I still use it quite a bit. So having two indicators, you don't want to go with more than two indicators, then you're going to get too much information and then you're going to be over analyzing everything. When I first started trading when I was 18 years old, I had like probably like, I don't know, five or six different indicators. And by the time you try to make a decision, like your head's all mixed up. You don't know what to do, right? Keep it simple, right? Keep it as simple as you can. You're trading. People think that they have to make things complicated in order for it to work. That's not true. Just have a system in place. And this actually is a system in its own rights, okay? And then just kind of incorporate maybe some of your, you know, for me, I like using support levels, resistance levels. You can do whatever you want. You can maybe you want to use a different indicator. Maybe you want to use the MACD instead of directional movement index because you really like that, or the RSI. By the way, the software that I use is called TC2000. There's tons. There are tons of indicators. If I click the plus sign here, look at all the stuff that's available here. Commodity Channel Index, the CCI, Danshin channels. You know, there's the Ichimoku, Bollinger Bands, whatever. I've tried them all. Believe me. Okay, I've settled though. At some point you got to settle down, folks, right? So there's the Ichimoku. All right, IGV, Software Index Fund. Here's the daily chart onto the cloud. No. So this is what I'm talking about with technology stocks. Why are they like? Why is technology sort of you know declining so much? I mean, look at the software index. It's a perfect example of why. Is this going to be the turnaround? Maybe, but I wouldn't count on it. We've had like little moves up in the past, right here, right here, right here, and right here. Every time though, it got close to the cloud, it declined. But this, the further away you get from the cloud, at some point, there is a mean, reversion that occurs, and things start to turn bullish. But I would, at a minimum, and some people have a strategy of waiting until at least the moving averages start to cross each other, before you consider. Anyway, NOW, ServiceNow, under the cloud, under the moving averages, in a very, very strong decline here. I mean, since it broke into the cloud here, it's dropped about 43.6%. There you go. Oracle, I mean, this too. My goodness. What a crazy pullback. And this is a great company. Profit margins positive, sales growth is good. But once it gets into that cloud, a lot of times things start to go bad. And there are a multitude of reasons. And does it really matter what the reasons are? The reality is it's happening. And so you have to react. Um, and sometimes you want to hold off and you want to give it an opportunity to recover, especially if you're using a weekly chart. But at some point, you have to come to a decision. Now, the good news with Oracle on the weekly chart, I will say this, is that it seems to be stalling at that 200, and that's a good sign. And price gapped up today. Look at it. Look at the percentage up, and it's still moving. Right? It's currently 3:15 p.m. as I'm recording this. 10.03%. It's creating a bullish harami. Remember that other pattern that I talked about. But look at the ADX, still moving up. Red line is still above the green line. Chico span is still under price, right? And if you look at the future cloud, Senko span A is still under Senko span B. I mean, there's just too much negativity still. So I'd hold off. OTF still under the cloud. This is a relatively new company, Blue Owl Technology Finance Corporation. I would not buy that. Certainly not. That's the weekly chart. Silver, SLV, up 8.01%. But unlike gold, it's not even close to the 9 period yet. But it's holding up at least above that Kijinsen, so that's good. So silver might recover, but it could certainly just drop by the end of this week. Remember, when we are looking at a weekly chart, this candle is still forming. We won't know what that looks like until Friday afternoon. Okay. Spotify, Still into the cloud. I would skip that. Okay. It's had its run. Now it's out of favor. Okay. The big money came out. They took their profits and it's dropping now. And it might drop for a while. All right. Price of sales is 7.23. That's a little on the higher level, higher end. So it might even come down to that 200. That's another 27 potential drop, 27.6% drop until it finds some support at the 200. That's huge. Look at the ADX again, moving up. That means the momentum is still increasing to the upside on the weekly chart. So week after week after week, this thing is dropping. TSM, on the other hand, completely opposite. Beautiful. We're in the right direction. We're moving in the right direction. That's what you want. TSM looks good. I like TSM. It's up 2.08 here on the weekly chart. What does it look like on the daily, though? It looks bullish. I forgot to give it a blue flag here. So the cloud is bullish. Price is above the moving averages. Chico's band is above price. Everything looks great. Okay, let's give it a blue flag. Boom. I forgot to do that earlier. Uber, on the other hand, no. Stay out of Uber. Under the cloud, bearish. Okay, you get the point. And let's take a look at these four stocks, like Zoom. One of our members requested this one, Zoom Communications. I talked about it last week too. They talked about it, I think, on the show a little bit. Zoom. It looks good. I like Zoom. 92.80 is a weekly level that goes back to this candle that I've circled there, November 29th of 2024. So Zoom, I mean, you guys remember Zoom, right? During COVID, what happened? This company took off like a thief in the night, up 405% in just 7 months. 405%. Once COVID started to, like, you know, not be as much of an issue, it started to decline, right? And it has dropped quite a bit. It has dropped so much in value. Like, in fact, from that point, from that high there, that was in October 23rd, 2020. From that point, it dropped. Like, if we measure down to these levels here, in a matter of, let's see, 2 years, it dropped 87% in value. Again, this is where Ichimoku can help keep you out of those trades. If you see prices under moving averages, don't be adding positions, okay? Or inside the cloud or under the cloud. Now, over here, it's starting to break above the cloud, and you can see that it's been consolidating, but there's been a lot of crisscrossing happening here. So they call that consolidation. Other people call it the accumulation stage. This is where slowly but surely more and more money is starting to come back into this stock. Okay, but we don't see the expansion here quite yet, but we're in the early stages, I think. This is a weekly chart. Notice how the cloud is turning bullish here. ADX is moving up. If we look at the daily chart, okay, it looks good today, up 3.12%. So we are literally in the very, very, very earliest stages here for Zoom. AMKR, Amcor Technologies. So on the daily chart, it's above the two moving averages, but the reason I didn't give this one a blue flag here is because the faster moving average is still under the slower one. See, the green line is under the red. Everything else is perfect on the daily chart. Okay, you've got a bullish cloud. Everything looks good here. I had a position back here. It had pulled back and now it's recovering. The thing is, you're gonna find resistance very soon. Let me just throw that level on for you so you can see the exact price level. It's 55.17, and that's a daily level. Okay, daily chart, and I'll just circle that for you based on that candle right there. So how far are we from 55.17? I can measure the percentage move. It's about a 4.7% move to reach it. So if we can break through 55.17, then I expect this thing will take off. And it needs to close above it, not just pierce that level. All right. Let's see. It's a weekly chart. So weekly chart is kind of consolidating. You can see that there. Okay, IONQ, another one of our members requests. This one is pulled back into the cloud. It did find support at the bottom of the cloud last Friday. And today it's up 0.31%. Now, the profit margins are not great. As you can see here, operating cash flow is also negative. EBITDA is negative. Price of sales is 226. That's really high. That's a very, very high ratio. So it's expensive. Beta is 3.75, which generally means that it's very volatile. Let's look at the daily chart. Yeah, it's been dropping. Bryn closed her position. So Bryn had a position in this back on October 17th or whatever, and she closed out of it. So let's see, October 17th. Yeah, she picked a good time to get out. She got out here. Not bad. Um, but since then, it has dropped about another 47%. So right now, this is like, you got to make the call whether or not you want to be holding a position like this that's been dropping on the weekly chart. Like I said, you still have support right there. And the low of that candle is 29.99. I think if it closes under that level, you're going to be, your next level is going to probably be around $19. All right. So just keep that in mind. SYM is Symbiotic Inc. Here it is on the weekly chart. It's showing some strength this week, right? Because you can see right there, it just started moving up all day. Today was up 6.19%. The problem with this one, again, the faster moving average is still technically under the slower one. And that happens because if the price stays, and you can see that little decline right there, right? So we had a lower high here from the prior one. That's what can cause that. And now, luckily, the green line is still above the red line on the weekly, and we do have a future bullish cloud. Chiku span is above price. That's great. Let's look at the daily chart. And so you can see the weakness here where it's under the cloud. There's that lower high, under that one. We have a lower low here from this low. But on a positive note, price did find support at that 200. So it's good to look for those next levels of support. As it's moving up, you want to probably give it an opportunity to see if it can break through this level. All right. I'm not too optimistic on this, and I'll tell you why I'm not super optimistic. It's because the volume is declining as price is moving up, which means there's less and less participation. There are less and less buyers coming in as price is moving up. But nonetheless, it's up 6.26%. So if we can get through this level, it's possible, then you've got something. Okay. I also like the fact that the directional movement index has turned bullish, but that white line is still moving down. So that's, you know, not particularly great. All right. That's going to do it, folks, for this video. Thanks for watching. I appreciate you all. Again, if you want to become a member, just go to my Blue Cloud Trading page here. And and there's more links right here. If you click on this, 9 more links, and you scroll down, and let's say that you want to use that software that I'm using for my technical analysis, it's called TC2000. And there's a link, and you can get a $25 coupon with this link. Just click there. It will pop up the page here for TC2000, the software. You enter your email in this box. You download the software for Windows, and it says here you will receive a $25 coupon, courtesy of Blue Cloud Trading, as long as you haven't used it in the last 12 months. And you could actually try out the software for free, because under pricing, if you go to software plans and you go to monthly here, you'll see that the basic is $24.99 a month. So with that coupon, you can try it out for free. I would recommend, though, instead of doing the basic, that you do the premium. And the reason is because there are so many more features here, like real-time scanning and sorting, chart drawing tools, easy scan wizard. You can create alerts on your stocks so that you get alerted by text or email if a stock hits a certain price level. So there's a lot of positives there. That's why I would recommend the premium. You'll still get a $25 coupon on that. So, all right, guys, and that's going to do it. And if you end up liking it and you want to, continue with the software, I personally would just say do the biannual, because pay it once every 2 years. It drops the price down significantly, down to $37.49 for the premium. All right. All right, guys, that's it. Thanks for watching. I appreciate you. I will catch you all in the next video.